Today, we saw the stock market making another new all-time high. However, there is a major warning sign flashing all day long. Should we ignore this signal or... Now, as we come over and look at how the indices fared across the board today, the Dow was up 49 points. Nasdaq was up 207 points. S&P 500 up 30 points, with the Russell 2000 being up 1.01. However, when we come over and look at advancing issues versus declining, we had 51.1% of issues declining on the day. Then when we come over and look at the sectors across the board, we had 4 sectors in the red. Financials was one of them. Then real estate, healthcare, and consumer defensive. Now, financials being down is a little problematic out here for us. But when we come over and look at the SPY real quick, notice today the SPY was up $3.50 or up 0.53%. But then when we come over and look at the equal weight S&P 500, notice it was actually red on the day, which is a clear sign this was not a broad-based rally, even though we saw the markets run into new all-time highs. Take a look at the dollar index today. Dollar index looking horrible out here. Dollar index was down 30 cents on the session, and that's really no surprise given the fact we have the FOMC right around the corner. But then as we come over and look at gold, gold today making another new all-time high. And let's not forget, we still have a price target up here for gold at 3747.70. Now, when we look at the fear and greed index, right now we're sitting at 58. We are back over into greedy territory. Then as we come over and look at the heat map, NVIDIA slightly in the red. However, Google and Tesla was up quite a bit. Tesla was up 3.62%. And we talked about this a little bit early on in pre-market. Tesla was a rocket ship on the way up. Tesla was up somewhere around 8% or so, which I tweeted out before the market opened, before ultimately coming down. Now, if we look right here, why was Tesla up? Tesla stock climbs after Musk sends this 1 billion vote of confidence. And what it goes on to say is Elon Musk is buying more shares of Tesla up to $1 billion worth. So if you have an insider buy-in, that is a clear indication Elon Musk is very confident in the direction of Tesla moving forward. Not only is he saying how great it is, but he's also putting his money where his mouth is. But then today, as we come over and look at the SPY, I want you guys to look at this on an intraday chart. On the 5-minute chart, we had that gap up today, consolidation, and then towards the end of the day, we ran up just a bit. Now, after hours, we do see the SPY down just slightly, but I got a question for you. If we look at this chart right here, then we come over and we look at the volatility index, the VIX. When the VIX is up, normally the market is down, and the VIX today was up 93 cents on the session. We come over and look at this on the daily chart. You see the VIX was spiking up. So why was the VIX up at a time when we see the stock markets making a new all-time high? Today, the SPY made a new all-time high. This is something we're discussing today during the live stream. Now, if you don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. And one of the theories that we actually came up with why the VIX could be so much stronger today in the face of the market also rallying was, could traders potentially be hedging for the main event that we have coming out this week on Wednesday? That'd be the FOMC statement coming out on Wednesday. And they're still pricing in a 96% chance that the Fed will be cutting rates at that next FOMC meeting. And then we come over and look at what Trump has to say today. Trump revised calls to ditch quarterly earnings reports. What comes next? And they're talking about potentially allowing companies to report twice a year. Let me know in the comment section down below. What do you guys actually think about this idea? Do you guys prefer to get the information quarterly, or would you rather have it biannually? I know my feeling on it. I just like to see what you guys have to say about that. Let's not also forget, right now we're in contract rollover. I kept getting this question asked so many times during the live stream. Mike, which contract are you trading? Well, right now, the December contract had more volume for the S&P 500 than the September contract did. September had 1.2 million. We had December at 1.4 million. However, we look at the Nasdaq, it's a little bit different story. Nasdaq had less contracts traded on the December contract, but more contracts traded on this September contract. However, I think that's going to shift tomorrow. So now as we come over and look at the SPY, we had that doji-ish looking candle, maybe a shooting star candle on Friday, and then today we gap on up. So are we about to get a pullback underway? Is that what the VIX was signaling, or was it potentially signaling just hedging ahead of the main event? Now with a gap, we have multiple gaps that were left behind from last week. This is a little bit more obvious when we look on the 30-minute chart. Here's gap number 1 from today. Here's another gap from last week. And even this gap right here last week, we did not come back and fill. So just within the last 1, 2, 3, 4 trading sessions, we have 3 unfilled gaps. And at some point, these gaps will come back and get filled. But look over here on the 30-minute chart. Look at the peaks in the MACD indicator. As price comes up and makes a new all-time high, notice the MACD indicator simply is not confirming that new high at this point in time. And what I mean by that is, as price made a new high, look how much lower the peak is in the MACD indicator. It is substantially lower. Now, we did have that gap up today, and we'll see if the market decides it wants to come back and fill the gap for tomorrow. If we look at the economic calendar for tomorrow, what is on deck? Well, 8:30 a.m., we have core retail sales, and after that, all eyes will be on the Fed. Now, I want to remind everybody right now, Take Profit Trader having a 40% sale off all their valuation accounts and 0 activation fee. Take advantage of this offer. Use the link in the description box down below. Use promo code epitome at checkout. Now, we come over and look at the futures markets real quick. This is an ABC pattern we had drawn out even last week. We touched on it briefly on the live stream. And notice today we came all the way up there. We hit that ABC pattern completion. Now, what is likely going to occur next? Keep in mind, if you guys watched Sunday's video, we closed well above the weekly value area high at 6605.00. And that increases the probabilities that this week or next week, highly probable, we will at minimum come back and retest that price point. And then we'll see if we want to come down towards the point of control or not. Now, we come over and look at the daily profiles on the 30-minute chart. Here's a level I thought we were going to come back to today, and we just barely missed it. And that is Friday's high, which was also a prior all-time high candle wick to the candle body. And you can see today we just barely missed hitting that level, and then the market rejected right back up. Now, as I look at this volume profile shape, this is going to be a P as in Paul shape profile. You can see overnight we ran up, and then we have a lot of consolidation being built. Is this cause being built to go higher or potentially go down? Well, they give us some very clear line in the sands. If we break below value area low at about 66.69.5, then I'd want to target that prior all-time high anywhere from 62.75 down here to about 58.50. In the event we break that, I then would want to turn my attentions back down towards the lows on Friday. Anything below that price point, I then really want to start to focus for potential runners down towards 66.05. Now, I do think there's quite a lot of bit of optimism out there about Powell cutting rates next week. Now, we come over and look at the Qs real quick. What do we got going on here? Qs, another new all-time high, gapping up. But then on the daily chart, look at the MACD indicator. Yes, we do have a bullish cross of the MACD indicator, but as we're pumping a new all-time high, are the upper peaks in the MACD indicator trending up or trending down? And we can clearly see the peaks are getting smaller and smaller. Now, on the 4-hour chart, you can see that big push up. The MACD indicator on the 4-hour chart still looks extremely strong at this point in time. Good separation of two lines, showing no signs of weakening at this moment. But then as we come over and look at the 30-minute chart, notice the MACD indicator did get a bearish cross to the downside today, but look at price. Where is price? Right back up, right near all-time highs in this market. Now, in the event we can break through this distribution area of the profile, tomorrow I would want to turn my attention towards that gap being filled. And I do think we'll see a little bit more cautious coming up right in front of the Fed. Now, we come over and look at the 4-hour chart for the Nasdaq futures real quick. Notice we had that strong push up today, and you can see how thin the profile structure is so far that's been developed this week. But keep in mind, we still close well above value area high from the prior week, 24,182.00. The rule behind that is quite often we're going to come back and test that level within the next 1 to 2 weeks, since we're dealing with a weekly volume profile. Now, I do want to caution guys, as we look at some of these lower levels, I want to remind you guys, seasonality wise, we are approaching one of the most bearish times of the year. However, all rationale has been thrown out the window, but don't be surprised if what seems out of nowhere, we start to see stocks starting to come back here just a bit. Now, I would want to also focus on the prior week's minus development area on this profile, anywhere from 24,392 all the way down here to about 24,283. I do think at some point in time, we'll come back and kind of trade back into that area just a bit. You can see today, we had a large widespread candle after we've already had a pretty sustained move from the low all the way up to this high. You can see if we measure right from this low, right up here to the current high today, we've ran 1,295 points. And this is the only type of pullback we've had, which was basically a one candle pullback, and then off to the races we went. Now, as we come over and look at the daily profiles on the 30-minute chart, this is a very well-defined P as in Paul shaped profile. However, this does not necessarily indicate that we are going to go higher or lower. But given the fact that it's in the context of an uptrend where the market continues to run on up, this could be a clear sign that we're having a short cover and rally. Now, what happens after all the shorts cover? Could we potentially see the market starting to come back down? Well, tonight, if we start breaking above value area high, and then we start coming down, I would want to target the point of control. I would want to target value area low, and then really anything below that price point, I want to start to target this breakout point and map this out. Candle body right up here to the candle wick, which would come in at a price point of 24,399.5 to about 24,385 with a P-shaped profile. Whenever we break value area low, highly probable we come back and explore the lower third of the range. Now, one of the things we can do real quick is measure from the high all the way down to the low, and notice this would be below the 38% retracement, which would put that zone in the lower third of the range. Now, if you trade with prop firms, you want to learn how to copy trade from TradingView to multiple accounts or even multiple prop firms, make sure to watch this next video right here.